So today we're going to talk about Airbnb, short-term rentals, VRBO, whatever you call it, and how you finance them, how you get the best money, all those things. So we always come from the money side. We come from the leverage side. There's a lot of classes, information out there on how to buy them, how to manage them. Our whole thing is like, how do you find the easiest, fastest, cheapest money for your particular Airbnb and your credit, your income, all those things. So let's dive in. We're going to go over today Airbnb investing and how you get the money side right.
Money, 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 hard money, money for real estate investing. Let's make money, 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 hardmoney.com.
So Airbnb investing, that's what we're going to go over, the money side. We see it come in a lot of different forms from a lot of our different investors. So the short-term rentals is not only, like someone coming in and vacationing, because we see a lot of people who use them for, traveling nurses, insurance companies who have to put people in, like they had a fire in their place and they're displaced. They use those. Corporate companies who want something that's already furnished when they have people coming in for a long project or something like that. So there's many different ways that people actually rent out short-term rentals, Airbnbs, and that's what we're going to go over today is what does the money side look like as far as the financing, the leverage. How do you do it? How do you make more money? How do you make it easier? The reason you do this, like in short-term rentals, is because you're going to 2 to 4, maybe even 5x what you would get from a traditional rental agreement. You might make $2,000 if you rented it for 12 months to a traditional renter, but you might make $4, $6, or $8,000 if you use one of these other strategies. Those other strategies we're not going to actually go through today. We're going to go through exactly how do you figure out, how do you get the money, and what does that money look like to actually buy the properties. So since we're in real estate investing, we're the money side, we get a lot of people who come to us and say like, hey, how can I buy a property and even do it with zero money down? So in this segment, we're going to go over a couple different things. Can people and have people actually successfully bought a property, used it for short-term rentals, Airbnb, and actually they got the 100% financing? So this all goes back to the strategy that Bigger Pockets, whoever calls BRRRR. You buy a property under market, you fix it up, and then you refinance it. So that same strategy, and there's, we have a lot of different videos on how that works, how the money side works out there. You can check out our channel, you can see that. But there are many people, maybe not many, but maybe 20% of the people that we see who come to us use the BRRRR strategy to actually get into Airbnb. That means they're buying a property under market, they're keeping all their costs at 75% or below, and they're refinancing either into a long-term, conventional loan or something like a DSCR loan. So you can use the BRRRR strategy with Airbnb and put zero down. But traditionally, what you're going to find in the lending side, in the buying side, is you're going to come and use the same products you do for a rental property. It's just the requirements are a little bit different. So you are going to find conventional lenders, traditional lenders out there who will lend on Airbnbs. But they're going to require your history. They're going to look at 2 years history. Do you have history in Airbnbs? Or can you at least qualify for the loan without any income from that property? Because there are people out there who make enough W-2 or from their business, they could qualify for a traditional loan or even a non-QM loan with putting 20% down, and their income covers the whole cost of that property. So they don't have to worry about qualifications. They don't have to worry about what income is coming out from that property. So if you're in that position, that's what you can look at. Another thing that people look at when they're getting into, especially buying that first Airbnb, or that their cash flow, or maybe they've changed, is something like a DSCR loan, which only looks at that particular property and what the income can be. We just did a video on DSCR loans, even with Airbnbs, and you can see the full video. We'll put a link here so you can check that out. But you can buy properties, number one, with zero down if you use the BRRRR and use it correctly, buying something under 75%. If not, you're going to be asked to put at least 20%, sometimes up to 30%, depending on your credit, depending on your income, and depending on where that property sits as far as income potential. Getting into Airbnbs, looking for money, be prepared to put some money in even if it's looking at partnering up, doing some of those things, and we will talk about that at the end of this video. Another great way of looking at this is going non-traditional financing and partnering up or looking for other people's money. So stay tuned for that. That'll come in one of the segments coming up. So next, how about if you don't have the W-2 income? You've gone to your bank, you've gone to your lender, and they say you don't have the income to qualify. Maybe it's your first transaction. What can you do? Do you have options? And the answer is yes. And like I mentioned in the last segment, we did a whole video on something which is called a DSCR loan. It goes through how you calculate, how you figure it out. But the truth is, if you just started out, if you just don't have the W-2 income, or maybe you just started a business less than 2 years ago and you don't have the tax returns, or you don't have the tax returns that qualify you, you could look at something called a DSCR loan. It's called a debt service coverage loan. What that does is it only looks at the potential rent or the current rent for that property. So even if you're using VRBO and you don't have any history, most DSCR lenders, and as I mentioned in the other video, there's all kinds of DSCR loans and lenders. You got to find the one that fits you and likes Airbnbs, which is probably 60 to 70% will do Airbnb loans. So shop around, look around, but DSCR loans, what that allows you to do, if you don't have any history, it allows you to use the average rents in the neighborhood for standard rentals. So if you're buying a property and the standard rents in the neighborhood will cover at least all your costs for your mortgage, all your costs for your taxes, insurance, HOA, you can get a loan without proving your income, without all that income documentation you need. So there are options. There are ways to get into loans with the situation where maybe you just changed jobs, maybe you just got into a job, maybe your W-2 just does not qualify because you don't have the income. You just started your business, you want to start a business, you want to transfer, you want to move, whatever that is, you would have to look at something like I said, the DSCR loan, and you're going to have to shop around because DSCR loans comes in many shapes, colors, sizes, and you got to find the one that's perfect for your credit, for your situation, and for the property that you're looking at doing. And just remember, if you don't have a history, they're going to use the average rents in the neighborhood for standard loans and not the rents that you think you can, or maybe the person before you got off that property. So what are the best loans for Airbnbs? What are the best terms? What can you look for? What should you look for? As I mentioned before, it'll all come down to your experience, your credit, and your income. And there's options for every one of those. You just have to be able to look and talk to different lenders and find out what's out there. But just like all loans, Airbnb, they come in all sizes. They come in 30-year fixes. They come in 15, 10. You could get adjustables. In most non-QM, non-traditional loans, you could also get interest only to help you with that cash flow. The loans that are out there, you have to find the one that fits exactly what you need. The only way you're going to do that is to be able to shop around. They also come with different down payment requirements, and it's going to be on your unique situation, on your credit, your income, what you have, where the property is. Is it a single family? Is it a duplex? Is it a condo? Because all of those things come with different requirements for lenders. So you need to understand exactly what you're getting into. The way to make this the easiest you can is have the income, but most important, have the credit. If you have experience, that's even better, because every time you can save a half a point or a point on a mortgage loan, that just puts more money in your pocket, less in the bank's, makes your career go faster. So you're going to look for different products from the 30-year compared to the adjustable rates. But you also need to look at what's out there for down payments, because some on Airbnb will only require 20%, some will require 30%. So if you're not using the BRRRR method, you have to understand how much money you have to put into the property, what kind of income you use. You're also going to come across with the non-traditional, especially the DSCR loans, they're going to come in with prepay penalties. So as long as you're going to keep that property for 3 to 5 years, depending on the prepay, you're going to have to understand if there's a prepay, because what happens in a prepay? You want to sell your house in 2 or 3 years, it's not working out, you want to move to a bigger thing. You're going to have to pay up to a 5% penalty to a lender for a prepay. So you need to check, does the loan have a prepay? Does it not? Does a prepay allow me to get a better rate so my cash flow goes, because I know I'm going to keep it for a long time? So go out there, look for the best terms, look for what you can do to improve your loans too. And that means getting your credit up. Maybe working with a partner, a credit partner, if your income isn't there. Whatever you can do to lower your cost of funds, to also increase your leverage, where maybe you go from 70% to 80%. I even know of banks out there who go up to 85%. So every time you put less money into a property means you have more money for the next property. And that might not be your goal, but it may be something you need to look at if you want to keep expanding it. How to get the cheapest, how to get the easiest, how to get the fastest money, all revolves around income from you and your property, your credit, and your experience. So work on those things. Make sure they're all in line before you start jumping in. What I see is a lot of people, they take the training, they take the classes to understand Airbnb, but they don't take the time, they don't take the effort to learn about the money side. And the leverage side is all what real estate is involved in, buying undervalued properties and getting the right leverage. Make sure you get the right leverage, make sure you shop around. The last thing I want to go through is buying Airbnbs with OPM, other people's money, and looking at that option. There's banks, there's lenders, there's even hard money lenders who will at least lend you for a short-term, a bridge loan. But really another strategy, and we talk about it a lot because we've done a lot of stuff with other people's money, that is using real people's, like your neighbors, your family, your friends who have money put away. Maybe it's in a bank, maybe it's in a retirement account that they're just not making anything. Maybe they just don't want the ups and downs of the roller coaster of the stock market. Whatever it is, there's a lot of money out there looking for better returns. And if you find that money or you partner up with that kind of money, you could buy more properties. If you're going to borrow it, typically what that means is it's easier qualifying because their family, their friends, they're people who want to get into a secured loan. Maybe it's somebody you don't know, but they're looking for somewhere to put their money that's secured, that they could get a better rate than they can at a bank. So maybe buy a VRBO and only pay someone 5 or 6%, but guess what? To them, that's 2 or 3 times what they're making at a bank. So it's a win-win situation. You don't have to go through the qualifications. You don't have to have the income, the credit, all those kind of things. So there's a big benefit. We have a lot of different videos on OPM because it's something that we do, we believe in. Check those out. Another benefit of OPM is you can structure it or you can set it up as, instead of just a loan, a partnership. So that means you have no debt requirements. Maybe you give them a little bit of a interest rate for the first 5% comes out, you get it. But if nothing comes out, if there's no money being made, if there's having a bad month or something, you don't have to pay them. So cash flow wise, looking at OPM as either a loan or a partnership is a great thing because typically you're going to have no money out of pocket. You're not going to go through the qualifications, and you can get into a situation where you have no debt that you're responsible for, but it's more of a partnership. So using other people's money, getting involved in other people's money and getting them to come in, it's a win-win situation. You're going to get easier, faster money. They're going to get a better rate that's secured by a real estate. So just make sure you do it right if you're looking at doing this. If you have any questions, any strategies you're looking for, we have a lot of great information on our site on this also. But you can reach out to us, email us, just message us. We'll get back to you and help you through the process of, if you have someone who's really looking at doing this, maybe us helping you show them why it's such a good benefit and why it's such a good place for them to put their money. And that way you could grow your real estate, your VRBOs, your Airbnbs a lot faster, because the less money you have into it, the more deals you could do, the better the cash flow you'll receive. So our whole goal with these videos, we've been in business 20 some years. We've done over $1 billion of transactions just in the private real estate lending, is to help you understand, what's the different products available? What should I look for? Because we want you to become successful, which means you need the cheapest, you need the fastest, and you need the easiest money that you could find out there. So if you have any questions, if you have a deal, if you're looking at maybe combining or looking at a partnership with OPM and you have a question, reach out to us. We've done literally thousands of transactions like this. We can help you. If you're new to real estate investing and you just want to understand all the different options, because the one thing you should understand in real estate is that the money, the leverage, as we say, there's money in the money, because if you get that right, everything else just runs faster, smoother, easier if you get the money side right. So we have a little course we call the 30-day Fuel Up Challenge. And what it does is it helps you identify your strengths, your weaknesses. It gets you into the terms and understanding the lending side. And then it gets you on your track of finding the right bankers, the right hard money lenders, and actually getting into finding the real OPM, because you need all of them. You need all of them as you grow, because there will be a time where you just need banks or lenders. There will be a time where you need hard money that needs to cover something, or you need or want to get into with helping other people, because that's what real OPM is. So if you're interested in that, if you're someone who wants to take your real estate career a lot farther, faster, you need to start understanding the money. So we'll have a link below. You could check out our course. We'd be glad to help you. And in 30 days, you're going to be light years ahead of your competition. So let's make some money. Remember, there's money in the money, and you have a great day.